Talk to us about the solidity of the pipeline. How are we seeing companies? Are they just hunkering down, weathering until we do see an ease up in volatility, or is it something different?
Yeah, I think companies are really preparing to go public. I think this year is going to be a situation where you see windows of opportunity, and they want to be able to hit the market when that window opens. We are starting to see signs of life. What I would say is that we're very focused on the VIX, which is the volatility index. And when that is between or really below 25, which is really where we like to see it, 95% of companies go public when it's below that level. So we're very focused on that as a lead indicator, as well as the convertible market, which has started to open up. The VIX has stayed below 25 for the past 18 sessions, which I think is a good sign. And we're starting to get inbound calls from companies that are looking to go public at the end of April, early May.
What kind of companies, Karen?
Well, there are a lot of interest from consumer companies. That's about 37% of the pipeline. 22% are tech companies, 19% are healthcare companies, about 10% are financial companies, and the remainder are industrial and energy companies. So really good breadth and depth and representation from the entire economy.
And when you're thinking about how it would be taken down by the market, it feels as though everyone's after an inflation hedge at the moment. Are these companies sort of analyzing how they can tell that story in some way?
Yeah, I think it's important. Valuations have adjusted for that inflation. Companies have to address the current pipeline situation with, all the disruption. So they definitely have to have their ducks in a row. And I think there's no rush to go to the public markets at the moment. There's plenty of ways to raise capital. So people really want to make sure that they're ready. What I would say is that we see a very healthy pipeline. The pipeline for companies is greater than it was this time last year. So we're very optimistic about that.
Talk to us about whether or not there is a disconnect between the public markets and the private markets at the moment.
I think we're starting to see that close. What I would say is that, public markets tell you exactly where they think things belong, and private markets respond a little bit more slowly to that. I don't think that's a bad thing, but that is, one of the key differences between the public and the private markets. I think companies that are looking to go public understand that. And they've gotten their heads around their current valuations and what the market expectations might be.
We've had, of course, a fascinating story in whichever way you want to slice it with what's happening between Elon Musk and indeed Twitter. And what many have looked at is perhaps a lack of a controlling stake by a founder, whereas we look at a Shopify, for example, today that's doing a stock split and making sure that the founder continues to maintain some sort of level of control. When companies are coming to the market at the moment, how are they looking at those sorts of narratives and the way in which companies are structured?
Yeah, well, what I would say is that ESG has become much more topical for private companies coming to the market. We're spending a lot more time with companies on the private side as they're preparing. Governance has always been very topical, it's really up to the company how they want to structure their business. Investors, I think, will assign a discount or a premium based on what they feel is the right structure.
You, of course, are an expert on the E and the S as well as the G, and I'm interested in the social path at the moment. That now is a time more than any that we're thinking about humanity, really, when we're looking at Russia, Ukraine, when we're thinking about all the stakeholders, the way in which employees want to see their companies stand for something, when they see the customers want to see their companies stand for things. How are you seeing that being sort of exercised by businesses that are looking to list as well?
Yeah, well, there's a lot more conversation around stakeholder capitalism because of that. It's the entire ecosystem that is focused on it. And I think companies are recognizing that their customers, that their employees, that their investors are all focused on these issues and want to make sure that wherever they work, wherever they shop, that those brands and companies are doing the right thing, whatever that may be.
And how about the E, the environmental? Because suddenly it feels as though a country with an administration that was so focused on energy transition is suddenly having to think about, well, digging, oil, gas, what we're usually dependent on for our energy. And I'm interested as to what companies you're coming through. You said about, what, 10% or so, or thereabouts were energy businesses. What kinds of energy businesses?
Yeah, well, we're seeing a lot of new energy. We're actually, experiencing a lot of transfers to Nasdaq in the utility sector as that whole sector transitions to new energy. So we've been seeing this for quite some time. I think the current climate has really raised people's awareness as it relates to our dependency on carbon. And then, of course, you have the SEC out with their climate change proposal. So there's a lot going on in the space. This is a lot of bobbing and weaving and threading needles, but I don't think there's any doubt that our economy is transitioning to new energy.